What's up, guys? This is Rey-Jay back with another video. And in this one, I wanted to break down what's happening with the overall market, talk about some important updates that came out involving FOMC, and what the market may end up doing from here based off the levels we're seeing, and what the price action is suggesting. Just know that I am not a financial planner, so take nothing I'm saying as financial advice whatsoever. And also, if you guys can, please check out my Moomoo link that's down below, or use my QR code to sign up. If you sign up for Moomoo and deposit $100, you're going to get $20 of free Nvidia stock. If you deposit $2,000, you're going to get $50 worth of Nvidia plus a $100 cash reward. Deposits $10,000 to get $300 worth of Nvidia plus a $100 cash reward. Or deposit $50,000 to get $1,000 of free Nvidia stock plus $100. You're also going to qualify for an 8.1% APY on uninvested cash, and the offer ends very soon, so please use my links down below to get those free Nvidia shares. Anyways, now let's talk about what's happening with the market. So the market was very tricky today, the way we were moving. First off, we started off with this head and shoulders like pattern. We also had this rising wedge like pattern on SPY that is still technically valid. We have not invalidated the rising wedge. And what happened was the Fed announced that they are cutting interest rates by 25 basis points. The market actually dumped. We saw SPY and the QQQ dump quite a bit. SPY went all the way down to 654. But instead of holding down there, the buyers came back and they pushed us right back up to where we opened. We were basically flat for the day on SPY and the QQQ. That shows me that there's still buyers who are defending. And if SPY could close below, 658, I do think there's going to be more hope for bears. But because we did not do that, there is still a chance that this rally is going to continue and the buyers may continue to push us up temporarily. Now, I still think that heading into next week, there is downside risk. I still hold that view looking at the rising wedge and the fact that we have these bearish divergences, but I don't think we're ready to dump yet. I think we're getting close, but we're not ready yet. And because we held support and buyers defended, there could be one more push attempt coming. We might even try to retest the all-time high, maybe even retest this wedge. And then we're going to be watching to see this top in the upcoming days. Once again, there should be a big reversal coming soon, but we're not ready yet. So what happened with the Fed? What did Jerome Powell say? Let's talk about that. Then I'll break down more details about the charts. First and foremost, the Fed cut interest rates by 25 basis points, which is what the market priced in. Yes, the market did actually dump quite a bit, but instead of continuing to fall, we just got bought back up. We also got the summary of economic projections from the Fed. And this is very interesting because when you look at the median targets for our change in real GDP, the Fed is anticipating that in the upcoming years for 2025 by the end, 2026 to 2028, we're expecting positive GDP growth, which is questionable because once again, the risk of a recession is still there, and that would imply there could be some periods of negative GDP. But on a yearly basis, of course, this is always a possibility. We'll just have to see about that. They're also saying they think that the unemployment rate is going to spike and peak at 4.5%. And then from there on out, it's going to just continue to downtrend for the upcoming years. If you look at unemployment, we basically saw this big spike with COVID and then it came back down. And since then, with the high interest rates, we've been slowly seeing unemployment climbing. They're expecting it to peak at 4.5%. They could be wrong about that. And that's going to be another thing that's worth mentioning. PCE inflation, which is what the Fed tends to prioritize when it comes to their inflationary records, they're expecting it to come back down to 2% by 2028, especially with core. And interest rates are now going to be looking at 3.6%, or basically 25 basis point cuts until the end of the year. So that's implying that the Fed is going to be looking for a bit of a shift. Sorry about that, guys. I think I had a little glitch right here. The Fed is looking for a bit of a shift right now in the way at which they're doing things, and that's going to be very important for us as well. When you look at these numbers right here, you guys can see that the Fed is also anticipating that unemployment is going to be looking like this. And with everything else that's going on, we're going to continue to see just a lot of these median targets. Also, a lot of the Fed officials have very similar views, so much of them are not necessarily expecting a big anomaly. A lot of them have very similar views about what they're seeing when it comes to our Fed funds futures rates and etc. They're seeing the same things over and over again, a very, very similar consistency in their targets. So what does this mean? Basically, in October, okay, when we get to October, we're expecting a 25 basis point cut by the Fed again. In October, we're expecting the Fed to give us 25 basis points for the cut. And there's now an 87.7% chance that's going to happen. And then in December, when we have FOMC again, we're expecting the same thing, another 25 basis point cut. So we're expecting the Fed to cut 2 times for the remainder of the year. Now, things are still kind of complicated because when you look at our inflationary numbers, they're still showing signs that inflation is still elevated. And the Fed obviously has to take its time to figure out how they're going to do things. Jerome Powell said that he's open to the possibility that if the Fed is wrong, they are going to have to resort to cutting faster, and they're going to be open to that, but they don't think it's very likely. They think that what's going to likely happen is we see inflation kind of go up, then it starts as a downtrend from this point on. It shouldn't be too bad, even with the tariffs that President Trump is imposing. That's what Jerome Powell is telling us, at least for now. On top of this, when asked about the dual mandates, the Fed is going to once again prioritize employment right now, and they are talking about the risk of higher unemployment. But that does lead to a lot of questions, because if we start to see bigger layoffs, like mass layoffs due to the high interest rates and a potential recessionary environment that we could be entering, what if the Fed is wrong? What if the Fed is actually behind the curve? And I think that's a lot of the things you have to remember. Jerome Powell could be known as too late Powell because historically the Fed do tend to be late because they use old data in a way, delayed data. They look at the data, then they react instead of projecting what's going to happen and making the moves beforehand. So the Fed was not cutting for all these months since December of last year. There was no cuts, no cuts, no cuts, no cuts. What happens? The unemployment numbers start to go up. We start to see big pain in the payrolls data. The pain starts happening, and what do? Then they start cutting. So you guys could see how the Fed is just kind of playing a game of catch up, and how there could be an arguments to be made that they are behind the curve. That's exactly what our Treasury Secretary Scott Bessent was saying, and that is one of the concerns, at least for the markets. Jerome Powell, however, said that the labor market is still going to be in a decent place because the Fed is going to monitor it. And then he also mentioned that housing's doing well. He was just trying to kind of like calm investors. That's why he was trying to add this calmness to his overall tonality. I would say he was more neutral, but simultaneously he was very ambiguous again. He kept saying we're going to take it on a meeting over meeting basis. And he just said the same things he typically says about how he's going to be independent. They have to wait and see what the data tells us. And the list goes on. He's just saying the same things over and over again. So is this bullish or bearish? Honestly, guys, I think that overall we're still neutral. He wasn't like too bullish or bearish. He was more neutral, but he did give us some Easter eggs, some hints that once again he wants to keep everything under control, but the Fed is using delayed data, and I still think that there is a risk of them being behind, behind the curve. So, how does the market kind of like interpret this? Well, the market, it dumped. We got this dump. We did actually dip after FOMC, like we were talking about, but instead of continuing to fall, we ended up seeing a big shift. We ended up basically kind of like dipping, then we just got bought back up essentially. So moving forward, there's not really much coming out for earnings for tomorrow. We just have like FedEx and minor earnings. But tomorrow is going to be Thursday, September 18th. We have initial jobless claims in the morning, jobless claims, the Philly Fed data when it comes to new orders and employment, all coming out in the morning. We'll see how all this data affects the markets. And then besides that, we have some bill auctions. And then the market's still at greed. That's making up the majority of sentiment. Momentum is quite neutral. And then we also have the puts call option ratio at extreme greed. The VIX is at neutral, so we're going to see what happens. But I think that because we held our 20 EMA, we're actually looking like we might see a small push in the markets. We might see some upside temporarily. Not saying it's going to last forever, just temporarily before we form some kind of top again. We might even try to retest the wedge up here, so that is a strong possibility. And I want to give you guys a warning about that because we have to be very unbiased, and FOMC can be very, very nuanced. What is good for the stock market is that the Fed is telling us that they basically want to cut more, right? We're going to be expecting by the end of 2025, the Fed funds future rate to be in the 3.6 area, meaning that there's going to be 2 cuts coming, one more in October and one more in December by 25 basis points each, maybe even more depending on our employment numbers. So that is some good news for the markets, okay? That is some bullish news. But Jerome Powell's tonality was neutral, which is not really bullish or bearish, which kind of puts us in a more neutral place. If we're bearish, you want to see SPY fill at 658. If we close below that for 4 hours, expect this to start dumping back down to the lows or below. That's the bearish case. The bullish case is that SPY holds above 660. If we hold that, I think we could be pushing for the all-time high again at 662 and maybe even go a little higher before this potentially turns down. I am leaning towards the bullish case a little bit more, but I do notice a triple bearish divergence that's still developing. So what I think is going to happen is we might get some kind of pump tomorrow. We might try to pump towards the all-time high. Maybe we try to go a little higher if we hold above 660. And if we make another all-time high, we might retest this wedge. And then we might be looking for a top very soon. And then I think next week is when the downside is going to really start, because I think the falling wedge is about to pan out, but we might try to retest it again. That sometimes happens. So there might be temporary upside for 662, maybe even as high as 665. But then I don't see us going much higher, just a couple more points higher. And then we're going to be forming a top. And I think next week we're going to be looking for major downside. I still think there's going to be that rug pull towards the end of September. I think that the rising wedge and the triple bearish divergence is still developing. And I think we might try to retest the wedge before turning down. That's what I'm thinking right now is the most likely possibility. So the downside move we were looking at is not going to happen immediately. It's going to be delayed. And I think that's what I'm leaning towards. Now we're going to see if we lose support or not, what the FOMC reaction is going to be. But I do anticipate there might be a small pump thanks to what the Fed is telling us before we get some kind of rug pull. And there's another reason why I say that. If you look at the QQQ, it's looking really good because we dumped pretty hard on the QQQ. We started off at the 592, 593 area, and we dumped all the way down to 584. So we dumped like 9 points, which is pretty significant. We dumped quite a bit on the QQQ, but then we got bought back up. And see the rising wedge. So there's a rising wedge on the QQQ. I think this is about to play out, but we might not be ready for us to just dump immediately. So to be a bear, I would like to see us lose 587. If we lose 587, I think this could be dumping a lot more. To be a bull, you want to see us hold above the all-time high 594, and then we could retest this wedge. I wouldn't be surprised if they launch this one more time to fool people. Everyone was expecting us to crash. Even I was talking about how the chart's favorite downside with the bearish divergences and the rising wedge. That's exactly why the market makers are going to try to trick people, get everyone to believe that the market's going to go higher, trick a lot of the bears. A lot of people may have started shorting the market really hard, but this is their trick. Now they're going to play a game with people and kind of give us one more pump. But then we're going to form a top. Once we start pumping like this, people are going to turn really greedy, and then we get a rug pull probably next week. That's what I think is going to likely happen. So that's my view. I know it's a shift, but of course we have to change our views depending on what Jerome Powell and the Fed say. I also mentioned to you all that the market could go up or down after FOMC. It depends on what Powell says. And I think we're going to be looking for a pump tomorrow to all-time highs, and then we're going to be looking for a top soon just to trick a lot of people. For the IWM, we got this big topping candle. We might try to pop for like the low 240s, then we're going to see if we reject. But I do think that this is going to be getting ready for a big downside move next week. We might pop a little bit first. ES is neutral. Notice that we're holding our EMAs though. If we lose 66.30 on bearish, if we hold above this, we could be looking for one more push for all-time highs into the low 6700s. Then we'll see if we turn back down off this triple bearish divergence. So I'll be looking for a move like this, and then we should be forming a top heading into next week, but there might be some temporary upside. On NQ, we held our key EMAs. If we lose 24,400, we're looking for a dump. As long as this holds, we're going to be looking for an attempt to push back up to 24,600. And then we'll see what happens after here. As we're trying to go a bit higher, we actually have a slight bearish divergence, and then we'll see if we kind of turn at least as time goes on. For Bitcoin, we're in the middle right here. We have resistance at 117,000, support at 115,000. We could push a bit higher for 117,000. Then we'll see if we kind of like turn back down from there. But overall, there is some upside potential. Tesla's looking bullish to me. I do expect more upside now that Jerome Powell and the Fed have said what they had to say. We're looking for 435 to 440 is our target on Tesla. And then we're going to see if Tesla turns after that. I do see some temporary upside, though. Look for some upside. Nvidia is going to try to bounce as well. It's trying to hold above 170. Might see a small push higher for like 174. But what if President Trump starts announcing the tariffs on semiconductors or something? We could still turn down lower. Also notice that Nvidia has a downtrend here. So we've been making lower highs like this. We might come back to retest this resistance right here where the EMAs are around 174, maybe a little higher to retest the trend line. And then we could be looking for a big pivot right back down towards the resistance. So be careful. Looking at Apple, we have 240s our resistance. It looks like Apple is going to be going a little bit higher, but there is another rising wedge that's developing. So that's very interesting. So I do think we go a little bit higher on Apple. We could slowly uptrend for like 240 to 242. Then we'll see if we get some kind of rejection or not. Netflix is trying to bounce here. Could be looking for essentially 1240, and we'll see if we reject. MSTR is very flat, but notice we like to base around 323 as long as that holds. We're looking for 333 as our potential targets. Celsius is trying to bounce here with the double bottom. We're looking for essentially 57.5, and we'll see if we reject. Supermicro is going to be likely testing 45.37, maybe goes a little bit higher before it rejects. Palantir is trying to bounce. You're looking for the low 170s. 172 is likely coming. Then we'll see if it rejects as well. Might see some temporary upside. Rivian is making higher lows as long as they don't lose 14. We're looking for an attempt for 14.5. SoFi is looking for an attempt for 28. It might bounce again because once again, the Fed is projecting more cuts for the year. And then AMD might be looking for essentially 162.5, and we'll see if we reject. ARM is also looking for 158 as our resistance. And then PayPal is going to be favoring 69.62 as our resistance for temporary upside. As long as Coinbase does not lose 317, we could bounce for the low 320s before we turn back down. This does look a little bit more bearish, though, in terms of its trend, but it could bounce into the low 320s before it turns back down. So look for a move like that as the most likely possibility. And let me just delete this line. For Amazon, we have resistance right here around this 234 area, and we'll see if we get some kind of rejection or not. Meta is looking for 780. Now, notice we have an inverse head and shoulders of 780 breaks. We could be going for like 790. So maybe we get some temporary upside before this turns. Even Google's trying to bounce. We need to hold 246, though. If we lose 246 on Google, I'm bearish. If we hold it, we're looking for a retest of the high around 255, and we'll see if it rejects. Microsoft needs to lose 507. If it holds above that, we're looking for the 510s all over again. Then eventually some balance fill around 513. And we'll see if we get some kind of rejection or not. The VIX is dipping, and we're going to see if the VIX is about to break out. There was a time when the VIX was getting ready for a breakout, but what happened was we basically did something like this. We kind of like pushed like this. We got like this push towards like the 29 area. We came back down. We pushed about 24, came back down, then broke out. There's other times where we do similar things like that. So, I wouldn't be surprised if they do something like that again. We're going to see if the VIX dips a little bit. Maybe this is not the full breakout yet. Maybe the VIX kind of turns down a little bit, retest the low 14s. And then later on next week, we start to see it push for the 20 area. Maybe that's what could be coming. That's also very possible. The 10-year came down quite a bit. Now it's trying to bounce. The dollar is bouncing and crude is kind of flat. So in my honest opinion, we're going to be watching our levels just to see what happens, but the chart does favor upside temporarily. But for the medium term, I'm still bearish. I hope that's as clear as possible. I think there's going to be a big sell-off likely starting next week because of the rising wedges and triple bearish divergences. But I don't think we're ready to start the sell-off now. I think that we might get one more push to kind of like hurt bears. I think that the market makers want to hurt the bears one more time. They're going to try to manipulate stocks. And then we could be looking for SPY to once again retest the resistance for a temporary push near all-time highs. And then once the top is in, we're going to be watching to see if this turns back down. And then we're going to be likely getting ready for a big pivot next week. But I just think that they're going to delay the move one more time because the market makers want to cause as much pain for retail as possible. And that's my view for now. Now, watch your levels just to be safe, but I just think that the market looks like it wants to bounce, at least technically speaking, for the short term. But for the medium term, I'm leaning more bearish. And I do think SPY will return to like the 640s by probably next week. So we'll see how it goes. We'll see a temporary upside move thanks to Jerome Powell and the Fed, and also because of manipulation. And then there's going to likely be more downside later on. That's my view. Now, I know it's a bit of a shift, but I have to do that because, once again, we can't always predict what Jerome Powell will do, and we can't always make promises with FOMC. All right, that's it for this one. Thank you for listening, and peace out.